Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The resistance for the Australian dollar at 67.65 continues to get a workout. For many challenges towards this region at least 4 times have failed, and therefore the market is still holding to a mixed outlook into the start of this week. While the US dollar slipped slightly on Friday to 104.50. Looking ahead, we get the RBA rate decision on Tuesday, and with the official cash rate announcement, it is expected that the market may see the RBA lift rates by 25 basis points from 3.35% to 3.60%. While global markets will also be keen to look at what the US Federal Reserve Jerome Powell has to say about inflation and rate hikes when he testifies before 2 committees this week. Along with that, we also get the US jobs report, which looks to 200,000 jobs likely to be created last month. However, a slowdown in jobs from January's unexpected strong rebound showed 517,000 jobs added. Along with that, the unemployment rate remains to a low or back since 1969 at 3.4%. So looking at technicals, well, they are trying to improve for the Australian dollar. So let's see how this level works out at 67.65, because we still have above 68.10, which if breached would confirm this engulfing candle and therefore put the challenge towards this 60-day moving average around 68.64 and likely to see further gains up towards 68.70. Looking at the euro, the market is putting in a slight firmer performance to the start of this week, and if so, may continue when looking to the resistance around 106.50-55. If breached, gives the next target, which still remains a firm cap somewhere around 107.05.15. Any pullback, which I do favour due to the lackluster technicals, so therefore upside attempts may fail and therefore look towards 105.75 to 105.20.25. The dollar yen, but the market bulls are taking a slight breather and catch their breath after the US services sector grew steadily in February after the data released on Friday showed that the supply management ISM non-manufacturing purchasing PMI, which measures the health of major sector of the American's economy, lodged a reading around 55.1%. While the reading above 50 indicates growth, any move beneath there would give contraction. The index did briefly post back in November 2021, a high around 69.1. So as the technicals break down slightly along with the price, the market looks towards the support level of 135.30. A break there, which undoubtedly would give further stop losses to a move of 134.45.55. However, I feel that since this strong upward trek and the break above 136 should eventually re-establish its bullish climb and look towards the region of 137 and on towards 139 to 142. The whipsaw price action, while the market still finds that the pound is seeing support around 119.30 after another demonstration on Friday rebounded quite strongly. In light of the pattern and the dollar slightly weaker to the start of this week, all eyes look towards 120.70-75 and the cap still expected to be regarded around 121.5 to 121.60. A rejection from there would give further scope from the recent price action and look still towards this base at 119.30-35. Gold still finding momentum since Friday's rally. However, we are a little bit overbought and therefore could find a little bit of difficulty as we get towards 56 or beyond there, towards that 1,860 region. As recently seen, the market was heavily supplied by the bear factor and therefore could see the market turn back lower. Support this stage seen at 1,838. A very whipsaw price action on Friday after market news sources reported that the United Arab Emirates had held an internal debates on leaving OPEC and pumping more oil. However, other sources, that is, reported that the story was far from the truth, and therefore we can see that the sell-off then rallies all the way back and punches through that level around 78 and exposes a region of 82. However, we are overbought, and I'm a little bit skeptical about this market movement. So therefore, if we see a close under 78.55 would reopen the downside back to 75.5. Well, that wraps it for the start of this week. Thank you very much for joining me, and as always, look out for the intraday port. I hope you enjoy the rest of the day.